What's up, guys? Welcome back. Today, let's talk about how I'm projected to make over 150% returns this year on just my options plays. No stocks, just strictly like the wheel strategy, the poor man's covered call. Why I think that really anybody could do it. I don't think my case is very special. And also throw in some things to let the trolls get their fair share in the comments section as well. Really, with all my options videos, the questions I get a lot. Like, how much can I expect to return every single month? What do you expect to return every single month? What stocks are you trading options? I'm going to get all of that out of the way. I've made over 250 options plays, whether opening, closing, throughout this year, 2021 so far. I'm going to show you all of them. I'm going to show you the ones I've lost, the ones that are closed, the ones that are still open, to kind of give you an idea of maybe not what you can expect, but really what I expect. And you could kind of use that as a marker for your personal finance journey. All right, so not wasting any time. Right now, this is live inside my options portfolio. Today, July 6th, about midday. My spreadsheet and everything has been updated for July 1st. So some things might change on my spreadsheet because, like I said, I've been doing this and pretty much compiling everything like I do at the end of every quarter. To make that point, guys, I think it's really, really important that you're tracking all of your options plays and your stocks, pretty much all of your investment. It teaches you lessons, it shows you your wins, it shows you your losses, but it also shows you the big picture, right? Sometimes we can micromanage one particular position or one particular loss and think we failed. But if you look at the entire picture like I do, I'm going to show you a big loss that I took on a risk that I took with a SPAC, and also when I got caught up with the GameStop. And I took losses, and at the time they stung, but at the end of the quarter when I compile everything and look at everything as a whole, I know that I'm winning, like I said, in excess of probably over 150% this year with a small portfolio. As we can see, my portfolio here is only $10,000. If I go back and look at the year, and I'm going to show you a screenshot of this, if we go back to the new year, July, December, boom, January 1st, I had $7,200 in there, and right now I am up over 10 with plenty of open positions as well that I'm looking to profit off of. So we'll see. Let's just dive in. If we look at if I go to my account and we look at the history, guys, this is pretty much, you can go back if you haven't already started making your spreadsheet. This is where you can go to orders over here on the right. And then these are everything that you've seen. Now, guys, this year for me has primarily been the poor man's covered call. If you don't know what that is, I'll leave a link for the poor man's covered call. It's my most viewed video at over 350,000 views. I have not been wheeling so much in 2021. Really, I kind of got away from it because I like the poor man's covered call so much. But I did the wheel for years, pretty much almost 10 years before I started dabbling in buying options. And so don't worry if you're just doing the wheel. I actually was making more upfront money with the wheel. There's a little bit of long-term gratification when it comes to the poor man's covered call because you have those long leaps options that you have to wait to go your way or not. So once you have all these input, and you'll see I keep them very, very simple because I can always go back and cross-reference this. All my options are in one place. So if we look at my spreadsheet for this, essentially I have all the options and whether they were a positive, whether I open that option, or whether I close that option, whether I bought or sold, we can see the positive negatives. I either collect premium or I pay when I buy to close. I'll get to this row over here in just a second. Just let me get to that. So here's all of the options plays that I've made this year. Like I said, 229 different options plays this year. And these are currently my open option plays. So first, let's look at, where I stand without any of my open leaps. You'd be surprised right now. And like I said, this is the part of the big picture. When I release this black, we could see that currently right now, I am at a loss of $3,577 for the year. So here's that big picture. Why am I at a loss right now? Well, because I paid a ton of premium for these options right here. Maybe not Voozy, those were relatively inexpensive, but my Apple, Pepsi, Starbucks, those were, pretty big premiums that I put up. And we see the current value. If I were to close those today, and I know some people are going to be like, those are open options, this is kind of cheating. This is where I'm at today. And I'll show you without the leaps where I'm at. That's what this column is going to be over here. And I'll show you what that means. But if I include all of my open contracts and how much they're currently worth, whether I'm up or down, we see that for the year right now, I am at a profit of 62.59. Now, before I show you like all the percentages and what that really means, if I were to take out the leaps options, so just the calls that I've made, just my poor man covered calls, let's release that information right here. We can see that I'm at 26.79. So essentially I've made 26.79 this year just selling calls. And you're like, that's not a lot, but it's really what I expect. As we're going to see, I am perfectly okay with $1,000 every single month. It's generally a little bit more. I tend to tell people that I can get 10% returns just doing the wheel, right? Just doing the wheel strategy, selling calls and selling puts. And that would make sense here because there's no puts on here. And there's another couple of things I need to think about with the poor man's covered call, which is different than when I do the wheel strategy. So listen to this. When I just do the wheel strategy, I play much closer to the money because I don't mind getting assigned because I'm just going to go and sell the opposite, the call or the put. So the premiums at the money tend to be a little bit higher. So this is what I was saying before. If you're doing the wheel, you might actually make a little bit more money, but it takes more work, right? Because you have to manage now the call and the put side, where I only need to manage one side because my leaps is so far to expiration. With the poor man's covered call, I'm trying to protect my leaps, so I collect less premium. I'm further away from the money. My deltas, where my deltas could be 0.4 or even 0.5 when I'm doing the wheel strategy, here I'm doing 0.15. I'm doing less than 0.2 deltas with my poor man's covered call. Also, when I buy to close in my wheel strategy, I buy to close at 70% profit. When I buy to close with my leaps options, once again, because I don't want something wacky to happen, I need to protect my leaps option, I'm buying to close at 40 to 50%. So I expect this premium right here to be less. But when I'm doing the poor man's covered call, that's where your strategy is going to come into play, because my strategy isn't to make a ton of money on my calls, right? My strategy is to just make a few extra dollars in premium, lower my net premium. But this year, what I'm really focusing on is these particular long calls that I have. Those are the things I want to make me my real amount of money for the year. So I also simplified this to my close and open options. I'll get to that in 1 second. But let's kind of take a look at some numbers here. So on January 1st of 2021, I had $7,208 in there. So far, if I take the difference here, my return, right, is this number right here. If I close all my options today, yes, I know trolls in the comment section. This is if I close my options, it would be $559.59. Now that's minus $300 because I have put $300 and $300 only into Robinhood this year. Okay, so I took the options profit minus what I put in, that's my return. So right now at the 6-month mark, let's make this a little bit bigger. At the 6-month mark, my return is 82.67% or 13.78% for a yearly projected, if all things continue the same, of 165%. Now guys, this is nothing set in stone. Right? I'm not going out there and saying that I am the greatest options trader in the world. Guys, I have so much to learn. People in my own Discord are much smarter than me when it comes to options. The point of this video, if you're here for education, the point of this video is to show you that when I say with the wheel strategy, you can expect to get 10% every single month. It's not far-fetched, right? I'm getting 13.78 with my leaps options. If I close them, I really think that that is going to happen for the year. It's realistic. And there's my $1,043 average per month on a $10,000 portfolio, about 10%. And I average about $27 per trade. That's opening and closing the net of everything. And here's the answer to the question I know a lot of people have. Brad, you're doing this with 10 grand. You're making 165%. If it was so foolproof, right? If you knew what you were talking about and this shit was legit right here, why wouldn't you be doing it with your whole portfolio, right? You have hundreds of thousands of dollars invested. Why not make 165% on $100,000 and you'd be a wealthy man? The answer is very simple. This is risky. Options trading is risky. The probability of long-term profit, especially when you are buying call options, is very, very low. As we're going to see in 1 second when I show you my close, I've lost a couple $100 on some plays. I can afford to lose a couple $100. Guys, this is less than 10% of my net worth. And I put a lot of work into it. If I had my whole portfolio banked on this and I made some of the mistakes that I've made even this year, I'd be screwed. So the simple answer is options trading, guys, is my hobby. I don't do it for income. I don't really do it for a career path. I'm not trying to be a trader. It's a hobby. I don't like sports that much. I don't really have other hobbies besides riding bikes and drinking beer. This is a hobby for me. So the reason that it's only 10 grand, the reason I'm only doing it with 10 grand is because that's what I can afford as a hobbyist. I got 10 grand, I might go to Vegas and play around it, right? Granted, I'm doing okay, right? But that's really the people. Why don't you do it with all your money? You're full of it, blah, blah. This is it. And for those in my Discord, they see that I've been doing this over and over and over again for, the months and years that I've been in the Discord. And if you really have no idea how to trade options, guys, I have plenty of videos. If you want to sort through them and look through the playlist, or if you want them all one place, guys, JJ Buckner and I, we made an options trading for a beginner course. I'll leave a link down in the description for that. You can either find it here on YouTube for free, or you can go get over 3 hours of content, depending on, what type of trader you are and how much you really want to learn. You could take me up on that option, guys. But now let's look at the closed and open options that I have for the next 2 quarters of the year. So I've had pretty much 3 main leaps, options, poor man's covered call strategies that I've used this year, and I got out of them either due to expiration or for other reasons. That is AbbVie, APXT, Dropbox, and Vail. I dabbled with Coca-Cola. The premiums, to be honest, they just weren't worth my time, and Coca-Cola is also not a real big mover. So it really wasn't worth it. I kind of just wanted to deploy my money in other places. But let's take a look at AbbVie first. And I probably should give a timeline on this so you can kind of see like return on investment. But guys, this is $258 that I made in AbbVie. And you can kind of get an idea. I would say that like every pair here. So you see, I wrote a call, buy to close, wrote a call, buy to close. Those are all pretty much going to be a week. So we got like 1 week, 2 weeks, 3, 4, 5, 6, 7, probably about 2 months. So $100 per month on AbbVie. Coca-Cola, let's see how I did on that. I think that was a win for me. Nothing much. $78. Like I said, $78, you're like, that's not a lot of money. But when you start putting $250 and $78 in some of these other ones, I think Vail was a good one for me. Let's see what Vail was. Vail was $190, and that was quick. I was in and out. 1, 2, 3. That was pretty much under a month I had those options. Dropbox, I believe, was also very, very good to me. $1,127. We have Nokia. I tried, during the GameStop AMC debacle, and then Nokia popped up like at the end. I probably shouldn't have been buying any calls. I know this one is a loss. I lost 198. Essentially, that just expired worthless. It never made it to my strike. After they're no longer a company, they have now merged, and that's kind of why I got in and out. I was thinking about wheeling Afria, and you could say I have one AT&T as well. I thought about trading with Afria. I made $20 on this, and then I heard they were probably going to, merge up, so I just got away from them. And then I was going to be wheeling AT&T. I got back into them. We know that in 2020, if you've been following me for a while, I wheeled the crap out of AT&T. It was probably the first one I was really doing. I had a couple hundred shares of it. Great dividend stock at the time. So I was like, all right, let me get back into it in 2021. And then they just said they were going to cut their dividend, and they're in a world of trouble. And yeah, so I just sold off those 100 shares, but I did make one call on them before I did that, and I got myself $18. Here's APXT. And guys, full disclosure, this was a leaps option I bought after just like drinking one night, being up, watching, YouTube, and probably listening to a YouTuber, and just risking it, right? Just having itchy fingers and needed to make a play and wanted to make I got greedy. Right? I got greedy and I did not do my due diligence. This is what happens when your due diligence is watching YouTubers, right? This was a SPAC. I opened it up for $640 and then it just tumbled. I tried to recover. And I think this was like a 6 to 7 month expiration, not a true leaps option. But at the end, it expired worthless and I lost $445. Like I said, I could expect to take that loss, and I'm okay taking that loss because options trading is done with money that I could afford to lose and go to zero. And like I said, it's hobby money to me. So let's take a look now at what I have open, and then we'll get you out of here. We'll start with Apple. Guys, I just recently made a video about Apple and my struggles with this Leaps option. And it's still soaring, which is great for my long call. I'm super happy, but I'm going to have to end up protecting my short call again because Apple has just been going straight up. But right now, currently, I said this is a lot of work with Apple. And this is going to be minus 259 is my current position in that. And that's really because I've had to buy to close my short calls to protect my Leaps. So once I get that all squared away, I think I should be okay. Pepsi is currently open as well. I'm currently at $150. Like I said, if I were to close my Leaps, right? This is a sell to close, roughly worth $1,600 at the time. I bought it for $1,535 plus all my calls. So this Pepsi is a great look at really what the poor man's covered call is designed to do. I pretty much bought my Leaps option right here. Then I sold calls against it, bought to close, sold a call, bought to close, etc., lowering the net premium that I paid. And then I can sell that option back. I'm not going to expiration. I'm not going to exercise the option. I'm going to sell to close one day, and that's going to be the difference. So hopefully I'm going to sell to close for $2,000, $2,500. That's what's going to increase that. And for the year and a half until this expires, I'm going to keep making $7 to $5 every single week. Not going to be a bad deal whatsoever at all. Starbucks has been pretty good to me. $390 right now. I got that option. I've done actually a couple with them. Here's one that I bought and then I closed it and then I got back in a little bit later. Probably shouldn't have closed it so soon. I needed to free up some capital. Tattoo Chef, a company that I also own hundreds of shares in. I also love the poor man's covered call with them. The premiums are awesome. $14.86 so far. If I were to buy to close this for $920, we could say I bought that option for $870. I've actually bought and sold Tattoo Chef a couple times, but that's going to be $14.86 if I were to buy to close. And Vuzi's like my golden goose right now. Just staying steady right now, but $27.15. I think at the time the options, this is two options actually. They're both worth $12.50 each. I think at one time these were up over $3,000 each, but that was when Vuzi was really soaring, and I still think they can, especially if ARK keeps gobbling them up the way they have been doing. Here's that poor man's covered call video if you do want to check it out. And here's another video that YouTube might want to suggest for you guys. Go for 10% a month. I'm telling you, with just the wheel, go for 10%. 10% over years is going to be a great time. And until I see you on the next one, stay positive, work really, really hard, and please be kind to me in the comments. Hope you have yourself an amazing day and an even better tomorrow.